general comment on the U.S. banking sectors and the major banks above all.
Okay. Well, the U.S. banking sector, in our view, is doing quite well in terms of like a balance sheet perspective. By that, I mean the risk profiles are greatly improved, funding liquidity is greatly improved, and their capital levels are higher. So from a safety and soundness perspective, they're quite healthy. However, our concerns remain on the profitability, given all the new regulations and expenses associated with that, and the changes in the bank's business models. A lot of banks are still struggling to improve their efficiency and as well as their overall profitability metrics.
Very good. And what do you think that could be the major headwinds for U.S. banks in 2015?
Well, first and foremost, it's obviously the low-rate environment. A lot of banks are generally positioned well for rising rates. And so given the current events, the yield curve is flattening again, which will likely mean more margin pressure, and it's likely that the Fed may not raise rates as expected mid-year. So once again, you're dealing with a very low-rate environment, and that puts banks in a precarious position because it's hard for them to grow revenues, net interest income, despite their loan growth. So banks may end up chasing yields, making bad underwriting decisions. So it'd be a difficult year, I think, overall to increase earnings if rates don't go up.
Okay, it will be difficult to increase the earnings. And speaking about the Federal Reserve, much more analysts than before are thinking that the hiking in the rates could be delayed, which consequence could have a postponement of the first rate hike by the Federal Reserve on the banks sector?
Well, I mean, it's anyone's guess when they actually will raise rates. If you look at the inflation data in the U.S., it's pretty benign, so they're not under a lot of pressure there. There seems to be a lot of, currency manipulation on a global basis. So already the U.S. dollar is strengthening against a lot of other currencies. So there's a lot of, other things that the Fed will consider. It does appear the U.S. economy is strengthening. But they don't seem to be under a lot of pressure to raise rates, and I don't think they want to do it too fast, just to be extra cautious. So, we don't try to pinpoint when they're going to raise rates, but given everything, the confluence of all the events in the U.S. and also on the geopolitical risk worldwide, I wouldn't be surprised if rates the rate rises get pushed back again.
Okay. I thank you, Mr. Driscoll, for your kindness.